Thursday, April 24th, 2025. Thank you for making me a part of your day. Before we dive on into this, do me a favor and smash up that like button. And if you find any value from this content, be sure to hit the subscribe button as well. We have daily videos on this channel every day at 6 a.m. Eastern Time. All right, so to get on into it, I have a few pieces of hopium at the beginning of this video, and then a few things that are just some causes for concern, mostly in the stock market. But okay, here's some huge hopium. What if Anon, what if from Bitcoin Data 21? I have shared content from this user before. Here is a fractal, a three-pronged fractal. We have the Bitcoin ETF launch, the gold GLD ETF launch, and global M2 with a 10-week lead. And you can see certain things that happen to align with Bitcoin. And, here's the chart that a lot of people are loving to share is the M2 money supply chart, right? It's like M2 money supply. If Bitcoin's going to follow M2's lead, then we're probably going to be somewhere around $130,000, $140,000 in July. I've expressed a little bit of skepticism with that, but it's not nothing. And so here's a third fractal, and we have gold. Now, I don't know if you remember this or if you had known this, but when the GLD ETF launched, was that a catalyst or was that a season where it was in gold's favor to go higher? Whatever the case, gold went much higher. The price of gold went much higher, and the GLD ETF ended up acquiring a lot of gold, which made gold more scarce, which of course helped drive that price up. So if you look at this fractal here, it's really fascinating to see that all three of them tend to line up. And what would this mean if we do line up with the gold fractal perfectly is that we would peak at $260,000, between $250 and $260 in early 2026. Now, do I believe that this is going to happen? No. Do fractals, are they worthless? I would also say no to that. It's something to pay attention to until you see some sort of deviation. I find fractals to be helpful, to be tools, tools rather than just we must follow these rules. And I don't want to throw anything away, just some data to take in mind. So, hey, that would be exciting, $260,000 Bitcoin. Another bullish thing, we have yesterday, $381 million flowed into spot Bitcoin ETFs. These are record inflows since February. So professional speculators, are they returning? So here's the fascinating thing. This tweet is from 2 days ago, and yesterday was Monday. And so 381 million of flows into spot Bitcoin ETFs on Monday. So what happened on Tuesday? If you haven't seen this, be prepared to be amazed. And hopefully this is the start of something new. $912 million of Bitcoin were accumulated by the spot Bitcoin ETFs. Could this be the beginning of a new season? I mean, if you were, I can't zoom in on this particular chart here, but if you were to look at every major upswing in Bitcoin's price, it was accompanied by a major upswing in holdings by the spot Bitcoin ETFs. You can see from January to April of 2024, Bitcoin ETF flows skyrocketed and Bitcoin's price did very well. And then as soon as that slowed down, Bitcoin peaked. And then same deal here from October to January, February of 2025. I mean, really, you could say December there, around that time. I mean, Bitcoin ETF flows were very aggressive. And then around the time that they slowed down, Bitcoin's price peaked at 108. Now, we did peak a little bit higher than that on the day of the inauguration. So could this be the start of something new? It is too early to call, but it's something to very much be keeping on your radars. This would be very bullish if we were to accumulate Bitcoin with these ETFs at a rate that we accumulated earlier in 2024. So moving on, Bitcoin, the final schematic. I apologize for this chart gore. This is wild, but is this a thing? Here's another fractal overlaid here, calling for Bitcoin to peak around $130,000. Now, the timeline for this is November of 2025. I don't quite agree with that. And then a recession. But I think this could happen sooner. I think the timeline could be sooner than this. Would we get to 130,000? I don't know. I tend to think that, if we're going to hit a new all-time high, it'll be similar to 2021, a double peak where almost, we barely broke through the previous early 2020 2021 all-time high for Bitcoin, and then we went down. So what would that mean? Maybe like a $118,000 Bitcoin, and then, in my opinion, I would be thinking recession. Someone who I follow gave their perspective here, part-time trader, and gave a similar analysis to what I think is going to happen. Now, I'm not with him entirely in terms of Bitcoin going down to $4,000 in 2027. If you know anything, I've recommended him because he's been very much on point. And a much smaller following. I think he offers a good perspective. But, I would expect a significant decline in Bitcoin's price in comparison to gold, or during the period of a recession. So we'll see, but I like the fractal. I like the chart. I don't like the timing. Moving on. That's everything for Bitcoin for this video, but there's a lot of stuff economically that I'm really still paying attention to, and I think can provide a lot of value, including a pretty long thread on something called the dollar milkshake theory. If you don't know what that is, stay tuned for the remainder of this video. Now, here's another fractal. This is a best case scenario. Another fractal which compares right now to 1998. So we tend to think of the 90s as a period where it was up only, right? The roaring 90s. And trust me, the 90s, even though I was a teenager in the 90s, I remember that period of time being just a time where it just felt like everything was going up and the economy was booming. But in the 90s, we had 1998. And something really interesting is that some stocks peaked in 1998 and then didn't come back for 20 years. The most notable one being Microsoft. Microsoft peaked in 1998 and then didn't break a new all-time high for 20 years. And then after it broke an all-time high, it was off to the races. But that was a long stretch there where Microsoft was really struggling. So Microsoft peaked in 1998. We had sort of a bear market in 1998. We went from February until late April, actually May of 1998. Actually, I don't actually remember the exact date because this is 2025, but there was a brief period where it felt like we were going into a bear market. We had a double bottom in the stock market and then had one final rally, a blow off top with the stock market where it peaked a little over $10,000. The Dow Jones did. And so, hey, is this the scenario ahead of us? I would be quite ecstatic if that was the scenario ahead of us, and that would put us blowing off in the Dow Jones at least at the end of 2025, early 2026, which you could expect something similar would happen with Bitcoin, and maybe this fractal here would end up playing itself out where Bitcoin would peak at $130,000. If that were to happen in November, then for sure we would most likely have an alt season. Like I said, it's not that I agree with this entirely. It's just something I'm going to monitor. I do believe that what we saw in February of 2025 was the peak for the Dow Jones, the NASDAQ, and the S&P 500, and we are at the start of a bear market, but I would love to be wrong about that. So we'll see. Keep on paying attention. That would put a bottom very soon, and yeah, moving on. A reason to be bearish. Now, I have two things. The next two things here are reasons to be bearish, in my opinion. So retail investors are buying U.S. stocks at a record pace. We have S&P 500, we have NASDAQ, so heavy NASDAQ buying, not as heavy S&P buying, but still a record pace here for buying U.S. stocks. Mom and pop investors bought a record amount of NASDAQ 100 stocks last week, according to Goldman data. Retail investors have been furiously buying equities since the market sell-off started in February. Insane. That is not a vote of confidence for us being at a bottom. That's just, in my opinion, retail rarely ever gets it right. I maybe even retail never gets it right. You have Warren Buffett sitting on over $300 billion of cash, and he hasn't done anything with that yet. And retail investors are buying the dip. That doesn't seem like something worth looking in. It doesn't seem like. Who would be right between Warren Buffett and the public? I tend to think Warren Buffett would be right. But not only are retail investors buying stocks at a record pace, they're also doubling down on leveraged ETFs. What could go wrong? This is insane to me. I mean, look at the rate of increase in leveraged ETFs. If you don't know anything about leveraged ETFs, it's the worst thing that you could buy, because even if it does, the particular stock that you buy performs well, the leverage ETF will not outperform it 2x or whatever. It's a 2x ETF. And then when that stock dumps, the leverage ETF will dump harder. And if you look at pretty much every leverage ETF chart, I don't know of a single example where this is not the case. What happens is that the chart, if you see my fingers here, it just goes down. The chart just goes down and then flat lines. But even if you zoom in over the last year for any of those cryptos, the flat line looks like it's going down and flatlining some more. So this is really a really dumb money kind of thing here. That's ridiculous. Don't ever, I'm serious, don't ever buy a leveraged ETF. And I like this comment here. I agree with it. This can mean only one thing. We haven't hit bottom yet. In fact, the distance to bottom is inversely proportionate to the insanity of that graph. So the bottom is far lower than anyone was willing to contemplate right now. Far lower or just lower, whatever the case. The bro bid for stocks, which is what it says on the chart. Oh man, it's not something that I'm a huge fan of, and decreases my confidence at least that the stock market has bottomed. I think that a lot of these people are going to get shaken out. Okay. Now, dollar milkshake theory. Let me show you something. What is dollar milkshake theory? Google says this. The dollar milkshake theory suggests that the United States' strong economy and monetary policy will attract capital from other countries, similar to milkshake attracting customers at a shop. So we have the Peruvian bull here. The milkshake reloads. So here's the thesis of this. Is a huge thread. I do want to cover a lot in this thread. I think it can be of value to you to just at least have some perspective as to what's going on with the dollar index and why it's not necessarily right now, at least a collapse of the dollar. It's just a moment in time where the DXY is going down. So the dollar index has crashed to its lowest level since April 2022. We are under 100 right now, and bears are celebrating the oncoming collapse of the greenback. Now, listen, I will talk about the collapse of the greenback. I expect it to happen, but my timeline is pretty far out. It's not like the US dollar is going to collapse within 2 years or 5 years. I'm thinking more of like an in our lifetime kind of thing. For those of us, I suppose I'm 43 years old, so under 45, So little do they know, this only makes the system stronger and changes the nature of the end game a thread. This month, amid chaotic trade policy moves and volatile global markets, the DXY has weakened considerably. The drop is mostly driven by ongoing trade tensions with China, when both countries have imposed heavy tariffs on each other. Since the beginning of 2025, the DXY has fallen about 8.3%. Dollar bears on X Twitter have been celebrating this move, decrying the coming end of the dollar system and rise of gold as a new global reserve currency. Ironically, this will play out eventually, just not the way they think. So we're seeing gold, Peter Schiff, he quotes Peter Schiff here, Peter Schiff, which of course, Peter Schiff is a huge believer in the collapse of the dollar. But I've been following Peter Schiff since 2010, and I can tell you it's always been imminent for him. And I do love Peter Schiff. But anyway, this is something that I've been predicting for quite some time now. Yeah, it was inevitable. I always thought it would be an external dollar crisis that would set these events in motion. I didn't realize that we would do it to ourselves, what we have. We pricked our own bubble, and there's a lot of air that's going to come out of it. That's what Peter Schiff says. Peruvian bull, he disagrees. Peter claims the rising gold price and falling dollar are indicators that the dollar system is coming to an end. And while he is correct about the prognosis of the U.S. fiscal situation and the fragility of the global monetary system, he is incorrect about the dollar endgame. Cough, cough, Peruvian Bull's book. Let's briefly review the dollar milkshake theory by Brent Johnson. Since the almighty greenback is the global reserve currency, it is widely used for a variety of purposes, including settlement of trade, foreign exchange reserves for central banks, lending for international debt loans, foreign currency exchange, outright dollarization, remittances and cross-border transfers, safe haven asset feature, euro dollar market. Perhaps most important of all, U.S. dollars dominate SWIFT transactions. Nothing to do with XRP. Stop it. Okay, anyway. And offshore banking systems. The offshore system is called the euro dollar market. USDs are lent into existence by foreign banks and used to finance global commerce. Banks in Pakistan lending euro dollars to oil refiners in Iran trade, for example. So, what does all this mean? This creates persistent and ubiquitous demand for USDs. It turns out that demand must be met with supply, or the global monetary system begins grinding to a halt. So this is what Belgian economist Robert Tiffin warned Congress about 65 years ago. So supply, demand, the global, if there's not enough supply, the global economic system will come to a halt. Here's Tiffin's dilemma. Testifying before the U.S. Congress in 1960, he said this: if the United States stopped running balance of payments deficits, the international community would lose its largest source of additions to reserves. The resulting shortage of liquidity could pull the world economy into a contracting spiral, leading to instability. Dollar milkshake theory. If U.S. deficits continued, a steady streams of dollars would continue to fuel world economic growth. However, excessive U.S. deficits, dollar glut, would erode confidence in the value of the U.S. dollar. Without confidence in the dollar, it would no longer be accepted as the world's reserve currency. The fixed exchange rate system could break down, leading to instability. So, I'm not going to read everything else here, but what I want to point out is that here's a benefit for foreign powers that the US dollar is weakening, is that they can now borrow cheaper US dollars, and they're going to be incentivized to do so. And so eventually that's going to catch up and the DXY is going to rise. But several things to pay attention to here. U.S. goods and services trade balance 1960 to 2016. China joins the WTO. Country enters the World Trade Organization. And so what's he say about that? Offshoring the U.S. industrial base as much manufacturing output loss as major war was not only done to juice U.S. corporate profits, but it was done as a byproduct of the necessity to export dollars to the world. In short, this means if the U.S. wants to keep the global monetary system humming, it needs to keep a trade imbalance and grow that imbalance over time if the world continues to grow faster than we do. Again, we've covered the Eurodollar in depth in pieces like Eurodollar Origins, etc. You can read all of that. This is called dollar recycling, and I've touched on the effects this has on the U.S. economy in my depth in my Dollar Endgame book, Peruvian Bull, Dollar Endgame book. Here's a graphic that shows this process. Pause this video if you want to read any of this. Let's move on. Here's been the benefit from the fact that the dollar is so ubiquitous. If you look at the U.S. stock market since 1996, if you invested $1 into the S&P 500 in 1980, that would have done almost a 99x. If you did the same thing into global, just $1, if there was like an ETF, of all the markets around the world, that $1 would have 20x'd. And so we have benefited in the United States, and people investing in the United States stock market has only benefited as well. And so, anyway, interesting thread here. I think I should just pause it right here. And this is a really long thread, but here's the point of this entire thread. I mean, you can see his name, Peruvian Bull. This is someone who is more bullish than what you'd see with a lot of people. And what he's saying is that this dump in the DXY is not the collapse of the dollar. And I do agree with that. It's not yet the collapse of the dollar, but it is something that's just a part of the natural cycle of things. Do I think that there is something systematically that is in the works that is going to change how we operate? I look at the 10-year yield, and I'm very nervous looking at the 10-year yield, thinking I don't know if we have the juice to get it down to where to where it's been in the past. And so what does that mean? Maybe that means that we for a season enter risk off, or not as much risk. What I should say is not as much risk on activity, and that we're actually going to have to do some work to invest into good products. So maybe the funny money is coming to an end in the crypto casino. There's for a time that it's not going to be as lucrative as it's been. But this is, according to Peruvian Bull, and I do like a lot of what he's saying, more of a function of just how things are working, and it's going to recycle itself. It's going to whatever. I've said enough on this very long thread. I still haven't even scrolled to the bottom here. So check this out. Peruvian Bull, again, is his name, Peruvian_Bull. But let's move on. Now, someone this is kind of a different perspective, kind of, okay? This is more so gold in comparison to the stock market. I've been recommending this account on my live streams the last couple of days here. I've been following this account for 3 months. This guy really is someone, you have to have his perspective on your radar. North Star, username North Star Charts. I'm tempted to say he's the GOAT. He's somebody who I follow on X, who I would say if I disagree with him, I have a harder time disagreeing with what he says than pretty much anyone else. And he has a specific focus on something called the capital rotation event. It has informed a lot of my mindset when it comes to what I think the next 10 to 15 years is going to look like. Everything is in a bear market in comparison to gold. Every sector. And what you would find on his account is that once that he has these 12 sectors laid out, and once all 12 sectors become and enter into a bear market in gold, we are at the beginning stages of something called a capital rotation event, that we now are entering a 10 to 15 year span where gold is going to greatly outperform the US stock market, like it did in, it was about 10 years from 2000 to 2011, 11 years, whatever you want to call it. And like it did in the 70s, that we are now about to enter a stage where gold is going to significantly outperform pretty much every other asset in the world. So here's what we've seen: a massive cup and handle dating back from 2011 down up to 2020, and then the handle, 2020 to 2024, and then the breakout. And then I think, I could be wrong, that gold has reached a bit of a local top, that it can get back under $3,000. And you can see his note here. This is where you buy silver. And then gold skyrockets. And so what does that mean? That means that, unfortunately, unless you hold hard assets, this is going to be a significant struggle moving forward for people. And we are talking about like for the rest of this decade, to where if gold gets to $10,000, that's not something that we really celebrate. Now, if you are a holder of gold, fine, your wealth has been preserved, but that means a lot of pain for people who don't hold gold, or really a lot of pain for poor people, a lot of people pain for people who don't have assets and who depend heavily on the dollar. What this means is that gold's valuation, but not only gold's valuation, everything's valuation in the dollar is going to rise. I mean, we are talking about inflation. We're talking about potentially gasoline. Listen, in the United States, this is a big deal. In Europe, you might already be paying this if you can convert this. Gasoline being like $8 to $10 a gallon in the United States. For reference, right now we're hanging around $3 a gallon. And the same thing happened, if you remember the aughts. In 1998, for a while, gasoline was under $1 per gallon. And then it went up. I remember the year I got married, 2008, it was $4 a gallon. It did a 4X. Something similar maybe down the road. And so anyway, North Star covers a lot of this and covers a big emphasis on gold and its pricing in terms of everything. So I have on my trading view, and we'll take a look at Bitcoin here in a second, but I have a new section here where I have pretty much everything priced into gold. And if you were to look at all of these things, like Apple stock, Apple peaked in 2021. Bitcoin has done okay, done well in comparison to gold, because Bitcoin has significant valuation swings. Nvidia is in a massive bear market in comparison to gold. The S&P 500 peaked in 2021 in comparison to gold. It peaked, wouldn't you know it, in November of 2021. Actually, it's January of 2022. I think the NASDAQ is what peaked in November 2021. I think the day that Bitcoin peaked in its gold valuation in its dollar valuation in 2021 is also the time that the NASDAQ peaked in its valuation. Look at the NASDAQ in comparison to gold. This is what the next decade is going to look like, and we still have a long way to go. And so North Star, he covers a lot of this on his account. It doesn't get better than this. Let's see this other tweet here. Back in 2019, gold was around $1,300. My cup and handle forecast was issued to the public based on TA weight of evidence. What followed has been the most powerful illustration of the value of TA you will Never see a better example of this chart formation. You have to check this guy's account out. And here he is talking about the capital rotation event, and all of these spheres in comparison to gold are in a bear market. This was a tweet from 2024, October of 2024. The S&P and the NASDAQ in their gold prices and now in their dollar valuations are now in a bear market. This is the beginning stages of the capital rotation event. 1930, 1972, 2002, and now. Be prepared. Don't get greedy with other things. Gold is a better bet, and in my opinion, gold miners as well. And then eventually coming soon, silver and silver miners as well. All right, last thing, simple thing. Speaking of gold, gold from Costco is currently $100 cheaper than the current spot price. Easy way to get credit card points too, probably the most liquid thing you could buy with a credit card. So hey, FYI, so maybe not right now. I see $3,299. I don't have a Costco membership, but if you do, check it out. Maybe an opportunity for some arbitrage there. This was a couple days ago. So interesting stuff there. But anyway, let's head back to the charts and take a look at Bitcoin. Bitcoin, man, it's really interesting to me just looking where we are right now. Earlier today, as at least of the day I'm making this video, Bitcoin did look like it, was moving down. It was heading back down, and maybe it was time to slow down. And yet here we are. Bitcoin at the moment that I'm making this video on Wednesday, April 23rd, is a little under $94,000. So where do we go from here? I do want to point out this is kind of shaping out. We'll see how the day closes, kind of shaping out to be an indecision candle. And we've been scorching hot lately. I tend to wonder if what comes next is a little bit of red, maybe a little bit below $90,000, but we are in an uptrend. That's the most important thing to me. We are now in an uptrend in the Bitcoin and in the total altcoin market cap, including Ethereum. So that's a good sign that we may have an opportunity to make some money over the next couple months on longs and on spot buys. We'll see. Line in the sand has not quite been crossed yet. I've identified $95,000 as a key point that I would love to see Bitcoin break through, but it's looking good right now. So let's see where we go from here. But anyway, I hope you enjoyed. That is all I have for today. I hope you have a wonderful day, a wonderful rest of your week. And I will most certainly be seeing you in another video. Peace.